The way you succeed as an active investor is we like to study what's called a market shift. We want to know where the money is moving. That way you can invest based off of data, not the headlines, because if you can find the data where the money is moving, and then you find it as an investment opportunity before everybody starts dumping the money in there, now you're investing not based off of the news, you're investing based off of data. That way hopefully you can get in before the headlines. Of course, more risk for more potential returns. But you can start to see the value here, because if you can beat the markets by a little bit, well, that little bit of gains can add up to a lot more dollars. Because now if you invest the same, let's call it $1,000 a month, you do this for 30 years, and now we're not talking about 200% returns, 500% returns, 30% returns. Let's just say you can get a little bit better. 13% a year. Notice how on the internet, a lot of people talk about, oh, we got a 5,000% return here. Well, the reality is those things are not sustainable. But if you can get a slight edge on the market, you just get a few percent better a year compounded. Well, now instead of having $1.9 million or $1.8 million, now you're going to have, in this instance, more than $3.5 million, which means, yes, you made more than $1.5 million more just because you got a few extra points. But again, more risk for more potential return. There's no guarantee here. And this is where, if you want to be an active investor, amazing, understand that it comes with more risk, because there's a chance that you're not going to get 13%. There's a chance that you might get 2%, negative 1%, 9%, 15%. And that's where now the more research that you do, the better types of returns that you're going to get. But the goal is you need to have that investing mindset, because a lot of people now when they get into investing is they assume that, well, as soon as I buy the stock, it should go straight up forever. And now you start checking that stock after lunch, you start checking it before you leave the office, you start checking it as soon as you wake up, you start checking it throughout the day, and all you're doing is monitoring the stock price. And I want you to remember, if your goal is to be an investor, you have to start thinking like an investor. If you bought a house tomorrow, are you going to go onto Zillow 3 hours after closing to see what the valuation of the house is? Are you going to go onto it every single day to see if the valuation is going up and down? No. People are going to think you're crazy because it's an investment, especially if it's a rental property. But we're doing that all the time with the stock market, because that's what the numbers show you. It's just going up and down all day and night long. But if you're an investor, remember, the goal is a long term. We're talking years. And so what's happening in the short term is just noise. And that's one of the things that becomes extremely difficult, because if you have a good investment that's backed by data, you did the research, you did the analysis, you want to own the company. And the stock price might not agree with the value of the company for a while. But if you believe in the value of that company, then you want to hold it for the long term. That way you can see the value of the company and the profits grow. That way you can get your share out of it, whether it's dividends, whether it's appreciation. But the whole idea here with the active investing is understanding, number one, it's more risk, but if you're going to be an active investor, you have to have a strategy as an active investor. The strategy here as a passive investor is ABB, always be buying. The strategy for us here in active investing is understanding market shifts, knowing where the money is moving. That way you can make an investment based off of data, based off of research, not based off of emotions, because by the time it's on CNBC, by the time it's on Reddit, a lot of that real money has already been made, and this is where now you need to pay attention to what's going on instead of just the headlines. That way you can find the opportunity that's better for you. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.